Welcome to Yahoo Finance Live. I'm Shauna Smith along with Dave Briggs. Let's get you up to speed on the market action because it's a totally different picture than how we started the trading day. You can see on your screen right now the Dow up just about 48 points. We were up well over 700 points shortly after the open. The move to the upside initially coming following that inflation print that showing that inflation has started to cool in the month of November. Traders initially very excited about that, although we can see the focus has now shifted to the Fed decision tomorrow at 2 p.m. Eastern time. S&P holding on to some of its earlier gains, was up nearly 3% earlier today, now up just about 0.5%. And taking a look at the Nasdaq 100, that's the best performer of the three, up just around 0.8%. Taking a look at the bond market action, the 10-year yield is still moving to the downside this afternoon, off just about 11 basis points at 350. Taking a look at some of the gains here in the market, I want to turn your attention to what we are seeing in oil. Crude moving to the upside, up just about 3%. We're also seeing some gains in gold. Taking a look at the sector action, still a bit of a mixed picture. I mentioned the gains that we're seeing in crude. That's reflected in the energy sector. Energy sector by far the outperformer in today's section, but you also have communication services, technology, not too far behind. Of course, those very interest rate sensitive sectors leading today's action. On the flip side, consumer staples, the underperformer today. Taking a look inside the Nasdaq 100, some of the larger cap tech names setting the pace for this afternoon. Microsoft, Google, Amazon, all holding on to gains. Energy, a similar picture of green across the screen. Exxon, Chevron, ConocoPhillips, there, some of the outperformers this afternoon, Dave.
All right, Shauna, let's get to the other massive story the financial world is consumed by today. That man, FTX, SBF, and the collapse. The former head of the collapsed crypto exchange FTX, Sam Bankman-Fried, facing a pile of criminal charges and civil claims. The Justice Department earlier today unsealing a federal indictment charging Bankman-Fried with fraud and conspiracy. The SEC and Commodity Futures Trading Commission filed separate suits alleging violations of securities and trading laws. Yahoo Finance's Alexis Keenan joining us with the details. This was action-packed, a very large indictment, 8 charges. What are we learning?
8 counts and the Department of Justice's criminal indictment. That's the big one, right? So that was handed down by a federal grand jury. And here is what they say Sam Bankman-Fried is guilty of. We've reached out to him to get comment as well. They say that he committed wire fraud against FTX's customers, also conspiracy to commit wire fraud against customers. That's basically lying in order to get customers' money into the enterprise, right? Into that FTX entity platform. Also, conspiracy and wire fraud charges against lenders. Now, that goes to allegations that there are bogus financials given to lenders in order to obtain loans from his entities. Also, conspiracy to commit commodities fraud going back to 2019. Now, those first violations I was mentioning, or allegations, those go back to 2019 as well. Also, conspiracy to commit securities fraud going back to 2022 only, so less of a timeline there, and that's general securities fraud. Also, conspiracy to commit money laundering back to 2020. There's no detail really given on that in this complaint. Finally, there is a charge for conspiracy against the United States for violation of campaign finance laws. So a whole lot going on there. In addition, are claims filed by the SEC. Those are violations of securities laws. Also claims from the CFTC for violations of the Commodity Exchange Act and its regulations. However, we should expect, given the DOJ's charges, that those 2 suits would be stayed or held pending the outcome of the criminal charges.
A lot of charges facing SBF, that is for sure. Alexis Keenan, thanks so much for breaking that down. We want to talk about the legal implications there. What's next for SBF? For that, we want to bring in former federal prosecutor Renato Mariotti. Renato is a partner at Bryan Cave, Leighton and Paisner. Renato, great to have you here. Alexis just laying out the charges that SBF is facing right now. 3 separate court filings, the DOJ, the SEC, the CFTC. Just first, your reaction to the number of charges that SBF is facing today.
Yeah, it's pretty amazing. I have to say the number of charges and the speed surprises me a little bit. And here's what I mean. When I was a federal prosecutor, I worked on a lot of parallel investigations with the SEC and CFTC. In fact, with some of the people who worked in this particular case. And those cases took years to bring to conclusion, to bring to charges. Sometimes they didn't even get there at all at the end. And then, I will say that, the not only is the speed astounding, this took weeks and not months or years, but the sheer scope of the charges, right? You just read them a moment ago. What this suggests to me is that the Justice Department is very confident in their case. I mean, one reason why they might charge, more broad charges is they want to make sure that they're able to extradite him and keep him here once they have done that. But at the end of the day, prosecutors are not going to charge cases that charge crimes that they think that they ultimately can't prove in the end, that they're going to dismiss. And this suggests a lot of confidence, despite an indictment that doesn't have a lot of specifics in it. And so that's really telling.
Renato, good to see you. So the speed of these charges implies what? And the confidence in those charges, does that lead you to believe that someone may have flipped?
Great question. So first of all, the speed tells me that two things. One, they thought that they had the goods on him. In other words, most of the time when you have a complex fraud case like this one, I would spend months reviewing communications, trying to find the smoking gun email or text message or IM, that sort of thing. There'd be a lot, sometimes the Justice Department would go after the SEC or CFTC, wade in the weeds while they're conducting their investigation. None of that here. They went right. It's like a monopoly where you go directly to jail. You don't pass go, that sort of thing. They just went right to the end here. Everything is thrown at Mr. Bankman-Fried at once. It tells me that they have a lot of confidence. And I think that is not necessarily due to a flipper. I think that is in part due to his own statements. I mean, here's a gentleman who, knowing he's under criminal investigation, instead of hiring somebody like me, lawyering up, remaining silent, he goes, talks to everybody possible, not just journalists, but he's on Twitter Spaces, talking to, potential victims, everyone possible, putting himself out there, making statements that can be used against him. I think that's part of the problem. And I think another issue here is just the sheer brazenness of what he did. As set forth in the indictment, it looks like from the very beginning, money was just completely mismanaged and used as his own personal piggy bank. A very obvious problem that'll be hard for him to explain away.
Yeah, money clearly mismanaged. Also, the lack of records. John J. Wright, he's the new CEO of FTX. He's testifying down on Capitol Hill today. He was asked about the records. He was asked about what he has found so far over the last few weeks at FTX. I want to play a quick soundbite and then get your reaction to that.
We're dealing with literally a sort of a paperless bankruptcy in terms of how they created this company. It makes it very difficult to trace and track assets, and particularly, as I've said, in the crypto world. It's really unprecedented in terms of the lack of documentation.
Renato, to what extent does this complicate the case against SBF if we don't have those records?
It's a smart question because in many cases that would actually help the defense, right? Okay, we have nothing written down, then you could just make it up as you go along. I think the issue here is in a different kind of case. This could really work to Mr. Bankman-Fried's advantage. Like, for example, if this was a narrow case about a specific portion of the business that was not being managed properly, or where there was a false statement that was a fairly minor part of the business. I think the problem here is that the allegations in the indictment are that all FTX customers were defrauded because they were told up front that their funds were going to remain available for their use and withdrawal at FTX, and they weren't. They were sent all over the place, including billions of dollars to Mr. Bankman-Fried. So, that alone, plus obviously all the other frauds here, it's just hard to explain away as, well, I wasn't paying attention or I wasn't attentive to that. I think, the fact that there might be a lack of communications that are kept. I know Mr. Ray mentioned elsewhere that they use disappearing chats. I think that would ordinarily be an issue for prosecutors as well if it wasn't for the fact that Mr. Bankman-Fried put himself out there so often, making a lot of public statements. I think he sped this along unwittingly, perhaps, but he got us to where we're at today.
Certainly enhances their desire to get someone to flip that paperless bankruptcy. As per what's next, there is an extradition treaty between the Bahamas and the United States. When do you expect he'll be brought home? And just your ballpark, what do you think we're looking at in terms of a potential jail sentence for Sam Bankman-Fried?
Yeah, a couple of big questions there. First of all, I don't think the Justice Department would have charged him unless they were confident that they would be able to extradite him. So I suspect they've already had conversations with the Bahamian government, and the Bahamian government has already indicated publicly that they're going to be cooperative. So I think that'll happen in a matter of maybe weeks, if not days, certainly weeks. He'll be here in the United States. But, like everyone else accused of a crime, Mr. Bankman-Fried's going to have rights, and that's going to include the ability to receive the discovery in advance of the evidence against him. He'll have an opportunity with his attorneys to review that and make motions and so forth. I don't expect a trial of Mr. Bankman-Fried until late 2023, more likely in 2024. And in terms of a sentence, I really think he's looking at decades in prison. I mean, a very substantial sentence. We look at the sentence, for example, that the founder of Theranos recently received. She's pregnant. And it has a much smaller dollar figure in her fraud than Mr. Frank Bankman-Fried has. And she got 14 years. I would expect him to pay a much more substantial price than that if he's ultimately convicted.
Wow. All right. Renato Mariotti, always great to get your perspective. Thanks so much for hopping on here. We want to stick with this story and get to the latest inside the Beltway, because the House Financial Services Committee holding a hearing today probing the collapse of FTX. It was a hearing Sam Bankman-Fried was supposed to testify at, which obviously did not happen. Jennifer Schomburger following this for us. And Jen, no shortage of headlines coming from this hearing.
Good afternoon, Shauna. In a 4-hour hearing, lawmakers on the House Financial Services Committee went on a fact-finding mission questioning the current chief executive of FTX, John J. Ray, about what caused the collapse of FTX, while its founder, Sam Bankman-Fried, was unable to appear before the committee because he was arrested on criminal charges Monday night. Ray, who was brought in to unwind FTX and who unwound Enron, said FTX was one of the worst cases ever when it came to record keeping, calling it a paperless bankruptcy that's made it hard to track assets.
The FTX group is unusual in the sense that, I've done probably a dozen large, scale bankruptcies over my career, including Enron, of course. Every one of those entities had some financial problem or another. They have some characteristics that are in common. This one is unusual, and it's unusual in the sense that literally, there's no record keeping whatsoever. It's in the absence of record keeping. Employees would communicate, invoicing and expenses on Slack, which is, essentially a way of communicating for chat rooms. They use QuickBooks, a multi-billion-dollar company using QuickBooks. QuickBooks. Nothing against QuickBooks, very nice tool, just not for a multi-billion-dollar company.
Ray called FTX's demise an old-fashioned embezzlement, taking money from customers and using it for your own purpose. Ray said the operations of FTX were not segregated and operated as one company, and that there was no distinction about who controlled the operations. He also faulted the company for not having an independent board of directors. Lawmakers also ripped on crypto. Congressman Sherman.
For 5 years, I've been trying to ban American investments in crypto. I'm the only member of the House to get an F from the only crypto-promoting organization that rates members of Congress. My fear is that we'll view Sam Bankman-Fried as just one big snake in a crypto Garden of Eden. The fact is, crypto is a garden of snakes.
While Bankman-Fried did not appear, his draft testimony was leaked, in which he intended to say he wanted to say under oath that he, quote, effed up. Despite Bankman-Fried's claims on Twitter that FTX had enough funds to make customers whole, Ray says at that time, just before bankruptcy, FTX did not have enough assets to cover liabilities, And when asked whether Bankman-Fried was working to undermine the scope of U.S. federal bankruptcy law by moving assets into accounts controlled in the Bahamas, Ray said it appears so. Now, Ray says he's been able to secure over $1 billion in assets, but this is an ongoing process and that it is going to take months. Back to you.
We will have Congressman Sherman joining us live later in the program. Jen Schomburger, excellent reporting there. Thank you. The indictment, of course, coming hours before Sam Bankman-Fried was set to testify before the House Financial Services Committee. That left the burden of explaining the FTX collapse to CEO John J. Ray III, who's been brought in to clean up this mess. Enron experience there. Joseph Ceballos-Roig, Semaphore domestic politics reporter, was at that hearing. Nice to have you on the program. First off, your biggest surprise. Oftentimes these are showboating at best. This was very substantive. What did we learn?
Well, thank you for having me on. And we learned that quite a lot about the extent of the failure of corporate controls at FTX. I mean, John Ray repeatedly brought up at least 5 times that this is the worst bankruptcy that he's seen, and this is the guy who picked up the pieces after Enron. And, he even said basically that despite all the sophistication that FTX promised its customers, this was just a straight up old fashioned embezzlement. There's nothing 21st century about this. Another Democratic lawmaker called this as old as the hills. But we learned a lot about the sheer extent of failures and probable criminal activity at FTX. And, we also got a glimpse of what potential crypto regulations may look like in the future.
Joseph, more so, because I know you've also been tracking the reaction that's been playing out in the crypto world. So what we heard maybe from Representative Sherman, just in terms of him saying crypto is a garden of snakes, this isn't just FTX. And then, of course, on the flip side of it, others would argue that this is more of an FTX isolated incident. What has the reaction been from those inside the crypto industry?
I think they're definitely taken aback by just how much damage SBF has done to their reputation on Capitol Hill. They were an ascendant lobbying force, especially this year, with SBF taking the lead. But the reputation now, it's in shambles. I mean, there's a lot lawmakers, particularly on the Democratic side, who I've spoken with, who are openly calling crypto BS. John Tester and Elizabeth Warren, both sitting on powerful committees on the Senate side. And even today during the hearing and the House Financial Services panel, Representative Rashida Tlaib quoted Warren and said that, this is crypto, a lot of it is BS, and blasted it as predatory. So on the Democratic side, I think you're starting to see a lot more crypto skepticism on the rise, while most Republicans are still kind of holding the line and saying that crypto could be a force for innovation, can bring more economic benefits. And you're starting to see like a little bit of split on party lines here.
I mentioned that John J. Ray III had experience with Enron, and hence part of the reason he was brought in here to clean up this mess, and that was discussed. How did he compare the Enron collapse to what happened with FTX?
Oh, this FTX implosion is far worse than Enron. That was one of the things he said, that and what happened with Enron, it was, quote, highly orchestrated financial machinations, highly sophisticated people, and again, old-fashioned embezzlement by just people just straight up taking money for customers and using it to cover their investments at Alameda. There really isn't anything, modern or new about this. This is a crime that goes back, a financial crime that goes back many, many years. But yeah, there's a lot that went on at Enron that, just FTX just goes beyond. The fact that this is a paperless bankruptcy is going to make it a lot harder for U.S. customers to get their deposits back if they had it with FTX.
Joseph, you mentioned that the reputation is in shambles when it comes to crypto, also skepticism on the rise. What needs to happen in order to win back some of that trust that has clearly been lost over the last several weeks?
Well, I think that there's going to be a point in which, SBF kind of recedes from the headlines, right? I feel that a lot of lobbyists I speak to are, they're combating all the negative headlines. SBF was on his endless media tour, just basically begging for forgiveness and saying he would do right by his customers. The indictments today really shows that, really undercuts his case and renders it basically mute. It is basically lies. But I think they're going to be starting looking toward January to the new Congress when, for example, a GOP House comes in. You're going to have a lot of more crypto-friendly Republicans in powerful positions. McHenry, for example, during his opening statement today said that what happened with FTX and SBF represents the actions of just one individual and shouldn't reflect badly on the entire industry. So they're starting to look towards a new Congress as a way to, kind of refashion their arguments, increase that outreach to lawmakers, particularly those who are kind of on the fence and just learning about cryptocurrency now.
Certainly the focus was on SBF today and should be, but I should say the U.S. Attorney Damian Williams from the Southern District of New York said in a press conference today that regarding the campaign finance charge, it was dirty money used in service of Bankman-Fried's desire to buy bipartisan influence and impact the direction of public policy in Washington. How much discussion was there of the donations he made, the time he spent on Capitol Hill, and how much looking in the mirror will there be from Congress?
I think Congress is going to have to stare real hard at the mirror here as well. I think Republicans have been more likely to bring up the donations because SBF, donated to a lot of Democrats, even though FTX, other partners at FTX donated to Republicans as well. So it's becoming a political weapon the Republicans are using against Democrats. And we're starting to see some Democrats, donate the money to other charities or other uses. But now that we know the extent of how SBF defrauded investors, I think there's going to be more pressure on those who still have money to just maybe find a way to return it to people who lost everything in FTX.
Joseph, we did get Forbes was able to get a hold of Sam Bankman-Fried's written testimony, which he was expected to deliver today ahead of his arrest last night. That obviously kept him from appearing or testifying today. I want to read you a piece of this testimony. And it wrote, to the best of my knowledge, FTX US has been and remains solvent and could pay off all of its customers in full tomorrow. Unfortunately, the Chapter 11 team has frozen the FTX US exchange, blocking customers' access to their account information and funds. So therefore, placing blame on others but himself. He continued to do that throughout the testimony. He also said numerous times that he has offered John J. Ray some assistance, that he has information that would be helpful. At this point, John J. Ray has not returned any of SBF's calls or texts or emails that he has made over the last several weeks. Just your reaction to that and whether you think SBF's appearance would have had a profound, or maybe if we would have learned anything new had he have made an appearance on Capitol Hill today.
I mean, it's possible we could have learned new things. I mean, the fact that SBF was arrested on the eve of the hearing really did steal the thunder from lawmakers who did want to learn more. Maxine Waters, Patrick McHenry, everybody wants to get to the bottom of what happened with FTX. And some lawmakers are basically expecting, a goat rodeo, as one put it earlier today. But it's possible we could have learned more. But, SBF has been doing a lot of these interviews. A common thing with him is that he really doesn't seem to take it seriously. Yesterday during one of his Twitter Spaces interviews, he was freely admitting to playing video games while he was answering questions from crypto observers. So, I would say I'm skeptical of how seriously he took the gravity of, testifying on Capitol Hill. And he would have probably muddied the waters, because actually John Ray was asked about that. And he said that SBF is in no position to know whether FTX can return money to its customers. He just isn't.
What a day. Joseph Zeballos Roig, really appreciate you being here. Check him out on Semaphore. Just getting started here on Yahoo Finance Live. Coming up, cooler than expected inflation data caused stocks to surge this morning. So why haven't stocks held on to those gains? And the Fed expected to raise rates again tomorrow. We'll tell you what it means for your credit card payments. And as we mentioned earlier, Congressman Sherman gives us his takeaways from today's hearing on the collapse of FTX. Stay with us on a busy day here at Yahoo Finance. All right, let's take a deep dive into the new CPI data, which came in lower than expected for November at 7.1%. The expectation was for 7.3%. President Biden held a press conference after the numbers were released and shared when he thought prices would come back down to earth. Let's listen.
When do you expect prices to get back to normal, Mr. President?
I hope by the end of next year we're much closer, but I can't make that prediction. I'm convinced they're not going to go up. I'm convinced they're going to continue from there.
Joining us now are Nancy Tangler, Lafler Tangler Investment CEO and Chief Investment Officer, and Kathy Bostjancic, Nationwide Chief Economist and Senior Vice President. Nice to see you both. Lots to get to. Nancy, we'll start with you, and we'll circle back to the CPI in a moment. But first, just a discussion of the markets, which were up. The Dow, more than 700 points at one point, fell into the negative earlier, and now up slightly. What do you make of it?
This is what we've had this year. I think over 80 or 90% of the days that we have in the books this year, the market has traded above or below in terms of percentages by 1 full percentage point. That kind of volatility is we haven't seen it for quite some time. So I think, in the morning you get the algorithms that read the headlines and they drove that early rally. But then there was an opportunity for some people to take some gains off the table. And so we think that's what kind of drove it through the rest of the day. But we're never looking on a minute by minute, day by day basis. We're looking out 3 to 6 to 9 months. And I actually think the news was excellent and will continue to happily surprise us as inflation becomes disinflation in the coming months. So I like where we held on to. The Nasdaq's up almost 1%. It has the longest way to go. And so I'm glad to see that some of those stocks are holding up really well.
So Nancy, you were encouraged by the number that we got. Kathy, what did you think of it? Because yes, certainly inflation, that picture improving, but that 7.1% print showing that inflation is still very sticky.
That's right. It's an encouraging number, and certainly it's great when you see a number, the monthly change beat expectations. But as you said, we're still above 7% on the headline. Core inflation still running at 6%. And when we take a look at what seems to be Chairman Powell's favorite measure now, core services excluding rents, that's still over 6% as well. So it's the service side is sticky. We knew goods prices would decelerate and some to outright fall. We didn't know the timing of it all, but that's not a big surprise. And the real issue is the service side of the equation.
And Nancy, it certainly will not influence the move from the Fed tomorrow, which by all accounts will be 50. How might it impact the commentary? And how do you believe the Fed chair views this number?
So I've been very critical of the Fed. I just want that on the table. They didn't create this problem all by themselves, though. The policymakers in Washington have spent a tremendous amount of money as people were going back to work and demand was at least moderating. I think what we're going to hear tomorrow is he's going to continue to be hawkish. That's his way of sort of jawboning markets to do the Fed's heavy lifting, which the markets actually have done. But I would also point out that you want to look at what the Fed's looking at. And of course, they're looking at PCE, which has less dependence on housing, for one thing, and on jobs. But if you do, you can't not look at the CPI. And if you annualize the 1 month and the trailing 3 months, which is what the Fed's really looking at when they look at the CPI, though that number is for the annualized, it's 2.4%, and for on a 1 month basis, and annualized last 3 months is 4.2. So after tomorrow's hike, the Fed funds rate will actually be above the level of inflation that we are expecting if it continues to move in a symmetric manner. And we have noted that it has done that since 1951. You're up 15 months and you're down 15 months. And so this is what we think is happening. It won't be a straight line, but we think that things have flipped over. And the last thing I'll say is that even in services, prices are coming down, and we're going to have that medical care tailwind to our backs, which was an anomaly that was pushing up CPI and will now actually provide a disinflationary impact as we move forward.
Kathy, how aggressive do you think the Fed needs to be or should be in the new year? And I guess, what do you think it's going to take in order for the Fed to maybe pause or essentially pivot?
Yeah, I think that, I agree with Nancy. I think for now they're going to continue to talk hawkish, especially since they're dialing back the size of the rate hike to 50 basis points. And there's still a lot of uncertainty. And even though inflation's moving in the right direction, we all applaud that. It could still be rather gradual and still well above 2% as we go into 2023. So beyond that, we think there is still another 75 basis points of rate hike, probably 50 in the following meeting, which is the end of January, and then a 25 in March. So that lifts the midpoint of the Fed funds target range to a little bit above 5%. And then we think they pause at that point and they hold that for all of next year. Markets have been really eager, though, to price in rate cuts and even the expectation and probability sometime mid-year next year. We think that's a bit premature to be thinking about that at this point. Especially, you should add that wage growth is still above 5%. So it's not just inflation. They also need to see wages get back to something closer to 3%.
A lot of investors anxious to hear the tone from Fed Chair Jay Powell tomorrow afternoon. Kathy Bostjancic and Nancy Tengler, thanks so much for joining us here. Well, coming up next, Apple reportedly preparing to allow rival app stores on its devices. We'll tell you why it could be making this huge change coming up.
Months after Apple agreed to comply with the EU's law to use USB-C chargers, the tech giant could be in the position to make another major change, this time to its App Store. Yahoo Finance tech reporter Dan Howley here with the details. Dan, what does Apple have to change now?
Yeah, this has to do with the Digital Markets Act in the European Union, and it'll essentially require Apple to, by 2024, allow for the installation of third-party app stores on users' iPhone and iPads. And that means that you won't have to continue to access apps only through Apple's App Store. You'll be able to use these third-party app stores to download specific apps. And this is something that the company now, according to Bloomberg, is actively working on. They have huge teams ensuring that Apple is within compliance of this law. And so, this is going to be a big shakeup for the company. They draw in billions of dollars in revenue through the kind of the 30% cut that they take for sales made through the App Store. So, there's a chance that we'll see a significant cut into that. But there's also the idea that people are loyal to Apple. People know the App Store, and maybe that they just won't want to use a third-party App Store for fear of, potentially downloading malware. That's been basically Apple's main go-to, is that, they curate the App Store, they ensure that apps in there are clean, that there's no malware or spear phishing apps in there, and so you can trust them, and that's why they charge that 30% fee. It remains to be seen how Apple's going to position this, though, when it does eventually come out, whether they'll provide a warning or something along those lines as to user privacy. That's really been its go-to. So I don't think it's beyond Apple to push something like that forward, and it's something that Google does as well. If you try to download a third-party app store, a third-party app from outside the Play Store, they'll give you a warning that's similar to that.
Dan, I know a lot of it remains unknown, but you mentioned that 30% in-app purchase fee. Any idea just how significantly this could potentially impact Apple's revenue?
Yeah, I mean, the European market is Apple's second largest behind the U.S., so it could be a big deal for them. It's still unclear as to whether or not Apple would charge a fee for vetting apps from these third-party app stores to appear on users' iPhones. There's the idea that is that still gatekeeping? Is it not? That's really what this discussion is all about, and what this law is about is gatekeeping, Apple keeping third-party apps out that it doesn't like. So I think that's still part of the discussion and something that's going to be worked out before this really goes into effect and needs to be implemented. But this is a massive change for Apple in the EU specifically. Whether or not we'll see the same change roll over to the U.S., I think that really is still up in the air. They haven't said anything here as far as being forced to change. So maybe it's just something that goes on in the EU.
All right, we shall see. Dan Hadley, good to see you. Thanks so much. Coming up, Moderna shares are soaring today as the drug maker unveils a potential cancer vaccine. We have the breaking details for you next.
It's time for our triple play. 3 stocks that we're watching in the final 30 minutes of trading. We got Pinterest, Moderna, and Meta. Let's kick it off with Pinterest. Shares soaring today, up just about 12% right now. The company benefiting From today's initial risk on sentiment that we saw play out in the market, but also an upgrade from Piper Sandler. The firm now has an overweight rating on the stock, noting a number of tailwinds heading into the new year. Now, this includes user growth that we saw last quarter in their earnings report, and also the potential to attract more ad spending. Piper Sandler also anticipates margin expansion and a buyback, a new price target on the stock of about $30 a share, so about $3.50 higher from where we are today. But on certainly Pinterest in its most recent report, that user growth, I think that's the one thing that Wall Street got very excited about, the fact that it's back on track, gaining new subscribers. Whether or not they're able to continue that trend is the big question here. Piper Sandler, though, thinks that they're going to be able to do it.
Yeah, absolutely. Seems like they have some confidence there. I'm with you, though. I think that user base is absolutely the reason why they're increasing on this. But outside of that, I don't know. I've always been on the side of wondering, who on earth is using Pinterest? I certainly am not anymore.
Oh,
so
I use it. You don't use it?
No, not at all.
I use it a lot. I think it's great for recipes, good to get ideas, mood boards. No surprise that you have it. I can't say I'm shocked about that one.
Well, Shauna, then that's all on you. You're
I'm the user base. Exactly.
Well, okay, so my pick today is obviously Moderna, the company along with Merck announcing a breakthrough in the efforts to find a cancer vaccine. Preliminary phase 2 results show a 44% reduction in risk of death and recurrence of the cancer. This comes with a few caveats, though. The baseline is by comparison to use of Merck's blockbuster Keytruda alone, which the vaccine is used with, and is only useful for stage 3 and 4 melanoma patients after surgery to remove tumors. So a little bit of a caveat there. But the big takeaway, of course, is mRNA's proof of concept. Thanks to the pandemic, they got the boost they needed with that, and now they got a step further, showing that you can train a person's T cells to recognize and fight cancer. So I like to call it like a bit of a Neil Armstrong moment. The pandemic was the mRNA taking off into space, and now they've taken a step onto the moon.
That was a
I
nice
like
analogy.
that.
Thank you.
Really brought it home for me. Skin cancer is personal to me, as it's in my family, and I have a 4-inch scar across my chest from a recent scare. But it is the only 1% of skin cancer cases, but the majority of skin cancer deaths, more than 7,500 on average, something I pay a lot of attention to, clearly. My play is Meta, surging today on TikTok news. A bipartisan group of lawmakers led by Senator Marco Rubio, unveiling legislation that would essentially ban TikTok in the United States. If passed, the bill would ban, quote, all transactions from any social media company in or under the influence of China, Russia, and several other foreign countries of concern, according to that press release. So interesting there. China-owned TikTok has come under heavy criticism from both sides of the aisle, including Senator Mark Warner right here on Yahoo Finance. In addition, though, FBI Director Chris Wray testified before Congress that recently he's extremely concerned over the Chinese government's potential influence through TikTok on U.S. users. Meta shares up more than 4.5% today on this news. Other social media stocks also jumped. Now, they still are down more than 60% year to date. But Shauna, I think there is genuine bipartisan momentum to ban TikTok. You're seeing it spread across several states. We don't have bipartisan agreement on the sky being blue. There is momentum here.
There is some momentum. I have questions whether or not it's going to get over the finish line. I also have, I think a lot of issues have come up with. Some of it has gotten bipartisan support, yet we haven't seen the legislation pass. So I have some questions about whether or not any action is going to be taken on TikTok. But of course, this follows some states banning TikTok on government-issued devices. We heard of South Dakota, Maryland, 2 other states, Texas being one of them this week that have taken steps. So lots of concern here about the national security concerns when it comes to TikTok. I'm a little bit skeptic as to whether or not that legislation is going to pass.
Seems like it's Dave and me against you today, Sean. I'm on your page.
There's a common theme here.
I'm with you, Dave. I think that, there's been so much conversation about the threat. We know that cybercrime and cybersecurity is the biggest concern these days. And I think that that's where the focus should be, because that's where wars are taking place, right? Online now. And I think that's the focus. It's not a surprise to me that they would consider banning. You've seen other countries like India already do that. No one in India can access TikTok. So I wouldn't be surprised if some level of restraint came up.
I don't know, we'll see. But if they do, in fact, pass it, millions and millions of Americans are not going to be happy about that. The kids love their TikTok. They love it.
Kids in my house.
Kids, exactly.
Oh, yeah.
All right, well, coming up next here on Yahoo Finance, credit card data is a treasure trove of information. We will show you what the latest credit card spending data is telling us about the consumer next. Inflation cooling in the month of November just a bit, but consumers clearly feeling higher prices in a number of areas still. Grocery prices up 12% from a year ago. Airfares still up about 36%. Transportation services up about 14% on a year-over-year basis. Here to discuss all this impact that it's having on consumer spending, we want to bring in Brendan Coughlin, of Citizens Financial Head of Consumer Banking. Brendan, it's great to see you here. So the impact, or what we're seeing, I guess, playing out in the credit card trends that I know you're closely tracking. What does this mean for credit card balances, the impact that inflation's having on so many Americans?
Yeah, what's really interesting is that consumer confidence is really plummeting, but the health of the consumer is incredibly strong. So what we're seeing in the data is that spending year over year is up 18% in credit card. That's up over 40% from pre-COVID, so well above inflation levels. And it's really driven by a couple of things. So travel this year is up 40%. And all non-travel is up 14%. So we're seeing the consumer really not back up in their behavior, what they're telling us in their sentiment, that they're not feeling great about the economy, but they're out spending still, and we see that continuing.
Yeah, what do you make of that dichotomy? Why is the consumer spending so fast? Is this sustainable?
Yeah, well, look, all the stimulus that came out during the early days of COVID really drove a couple of things. So the average consumer right now has 20% more in deposits than they did before COVID, and they have less debt leverage. So their credit card balances, while you're starting to see them tick up a little bit, they're still well below where they were pre-COVID. So that's the health of the consumer is really strong. They have more liquidity, less debt. That's giving them the confidence to go out and spend the money, even though they're not feeling great about the economic situation. And mortgage rates are high and inflation is high, but their wallet is still fat.
Yeah, when you take a look at the New York Fed data, at least for the third quarter, credit card balances alone during that quarter were up 15%. That was the quickest growth that we've seen in just about 20 years. I think everyone wants to know, when the Fed continuously is raising hikes, we're expecting another rate hike tomorrow. What does that mean for credit card rates, and why should so many of our viewers care about it?
Yeah, look, when short-term rates go up, credit card rates tend to go up as well. Many customers have found comfort in buy now, pay later as a cheaper alternative in some spots. But some of the headline rates around credit card balance growth is a little misleading because customers delevered a lot during COVID. And so they're coming off of really all-time lows and building back up a little bit. So when you look at credit card debt overall versus where they were pre-COVID, it's still below that. So the health of consumers are pretty good. Now, the tail of the economy is felt differently across customers. So if I were to decile out the economy, the bottom two, so the bottom 20% of the U.S. is feeling the pinch a little bit more, and they're back to paycheck. But the majority of Americans still have more money, less debt than they did before COVID.
Credit card APRs are their highest rate in 30 years, and Congressman Ro Khanna, he wants to do something about that. This is what he tweeted. Interest rates on credit cards are so astronomical that someone with a $5,000 credit balance could pay an extra $1,000 in interest in just a year. He says this should be illegal. It's time for Congress to end Wall Street's predatory rates with the 15% cap. What do you make of that?
Yeah, well, look, I mean, credit rates are up, deposit rates are up too. The country has not been in a period of rising rates like this in quite some time. So the average U.S. American needs to adjust to that, and they are. Look, mortgage rates are at 7%. Home prices are starting to tick down. Deposit rates are up a lot so far, particularly the second half of the year. So I think this is just a recalibration. This economy has been in a state of persistent low rates since the financial crisis in 2008. Look, we're still in relatively very low rate range. If you took a 40, 50-year view, even despite the tick up in rates, they're still significantly lower than they have been historically.
It's amazing to me how much consumers continue to spend, despite the fact that it seems like we are hearing time and time again that we're heading for a recession.
It's the big GIF.
Consumers
I don't
are
get
resilient. I know. I don't get it either.
I don't get it.
Brendan Coughlin, great to have you. Thanks so much
for having me
joining us here on set. Well, coming up, United Airlines ordering a number of new planes from Boeing. United Airlines CEO Scott Kirby joined Yahoo Finance earlier today. We're going to hear what this means for their business when they come back.
All right, we're checking on shares of United Airlines and Boeing. United says it will buy 100 737 MAX jets and 100 787 Dreamliners. United saying it's now expecting to take delivery of about 700 new narrow and wide-body aircraft by 2032. And check out the numbers. Boeing basically flat on the day, and United just hammered on that on some broader news in the airline sector, down more than 6.5%. We'll discuss that in a little bit. Coming up, a volatile session on Wall Street nears the finish line. Find out which stocks are making the biggest moves when we come back. All right, just a couple of minutes away from the closing bell. Proud Supermanian joining us for the next hour, but Jared Blickery here to break down the big movers of the day. Jared, what's on the move?
We're going to begin with Tesla here. You can see began the day in the green, now trading at a 2-year low, but it's sporting a market cap that just dropped below $500 million. That is the first time since 2020 that has happened. Just a reminder that the price of a Tesla stock, that is directly proportional to how much Elon can borrow against it. And another fun stat for all you value investors, Tesla at 29 times forward earnings has never been cheaper ever. And we got to move on to the travel space where we're looking at a pre-announcement by JetBlue. You can see the stock is down about 7% today, down the most in 6 months. Airline announced to investors that the key passenger traffic metric of revenue per seat mile is on the light end of their previously announced guidance of a 15 to 19% increase. Now, in addition to weak December traffic, the carrier also blamed Hurricane Nicole and fourth quarter holiday calendar timing. Elsewhere, Spirit trimmed capacity, and Alaska Airlines, they warned of soft holiday reservations. And we got to check out what's going on in the Coinbase space, the crypto space. And here we have Coinbase down 9%, trading down to a record low, by the way. More bad news hits the crypto industry. SBF in custody, Binance halting withdrawals of USDC, more questions surrounding cryptocurrency counterparties. Now, you might wonder why most of our crypto board here is in the green, and you can thank CPI this morning. This big spike up right here, well, that was on the inflation numbers that we got earlier this morning. Now, as we head into the close, let's check out where the day now stands with just a few seconds left. The Dow is up about 0.25%. The S&P 500 is up about 0.7%, and the Nasdaq up 1%. And now, just going to give you an idea of the sector action for today. And just a couple seconds left. We do have real estate in the forefront, followed by energy, communication services, material, and tech. All of those are the outperformers today. Here is your closing bell.
That wraps up today's wild trading day. All three of the major averages ending in the green, but well off their highs. The S&P was up nearly 3% at the highs at the session, closing up less than 1%. The Nasdaq up just about 1%. The Dow up 105 points. The movements today coming after that CPI report that we got this morning showing inflation cooling in the month of November. Let's talk about it, what it means for the markets here going forward. For that, we want to bring in James Liu, Clearonomics founder and CEO. James, it's great to have you here at the desk. So help us make sense of the market action that we saw today. A lot of euphoria shortly after the open, clearly losing steam quickly. What do you think it was that changed the market's mind?
Yeah, I mean, Shauna, there's a lot of mixed feelings about these reports. Is good news or is it bad news?
Yeah.
That's really what the market's trying to figure out, because this was a good report. I mean, we've talked it to death so far today, but the annualized rate for this monthly number was about 2%. So if we keep this up by the second half of next year, we could get down to 2 to 4%, which would be amazing and the best case scenario. The problem with this is that you still have the question on the Fed. There's really no question about what they'll do tomorrow with 50 basis points, but then what do they do next year? And a question about recession. I think that's the biggest divide in the market right now. A lot of folks think there will probably be a recession in 2023. We're not really in that camp. We still see a lot of strength, especially with today's numbers, but still shallow growth. And of course, that's creating dispersion in what people think might happen in the equity markets.
If you could pull out one portion of that CPI report as the best news, what is it? And what do you think will be the stickiest portion of inflation?
Yeah, so the inflation story has shifted over the last year from energy prices, supply chains, and now we're looking at core CPI. And so the best part of core CPI was everything except for shelter. Right, so everything else decreased. Used cars and trucks dropped by 2.9%, not on an annual basis, on a monthly basis. Right, so that's a big deal. But shelter is sticky. We're going to see that keep rising for a little bit longer.
Sticking with sticky shelter and housing, we saw RH CEOs talking about how the housing market is kind of collapsing as he sees it right now. Is that kind of the kind of thing that might kind of have some spillover effects for the rest of the market and even the economy?
Yeah, it's a great question, because a lot of the challenges we've seen in markets, crypto, tech, and housing so far have not really spilled over into the rest of the economy. So housing has the potential to do that. Of course, I don't think anyone's calling for a 2008 type of situation. We don't have the systemic risk that we did back then. But over time, maybe that reduces people's willingness to spend. Again, we haven't seen any of that yet, so it could do that, but really no signs of it just yet.
James, what do you think this means just in terms of, or how are you approaching it when it comes to investment opportunities? Because certainly the reaction that we initially saw, that risk-on sentiment, faded very quickly. And I think a lot of investors are trying to figure out what exactly is going to lead us higher in this next rally.
Yeah, that's a difficult question, because you do almost have this V-shaped pattern for the market and the economy. You have a dip next year. All of the forecasts are down, in some cases negative, again, going back to the recession question. And when you look at earnings growth, over the next year, earnings growth expectations have come down quite a bit to about 3.8% for next year, before bouncing back in 2024. So if you have this V-shaped pattern, what do you do? I mean, valuations are going to be challenged over that period. So our recommendation, our suggestion to investors is you've got to have a longer time period at this stage, right? You have this blip next year, but then if you look over a longer time frame, we expect earnings to get back to 7, 8, 9% earnings growth. So that's really the challenge over the next 24 months.
Story of the day is, of course, the indictment of Sam Bankman-Fried, the collapse of FTS, the trial there, the hearing in Congress. Are you surprised at the lack of contagion? Do you expect more down the road in terms of crypto or just widespread impact?
Yeah, I mean, of course, it's terrible that so many consumers lost their funds and lost their investments in the collapse. However, this is a very different situation than we had even back in 2000 with a lot of tech stocks, or even more recently because back then you had households that were very fully invested in tech stocks. And so when you have the tech collapse, that of course causes a wealth effect across the market. And that caused a drag for several years. And you really don't have that today. So you have a lot of folks who were invested in crypto, but that really doesn't spill over. There's no contagion effect to the rest of the economy. So that's the good news. The bad news, of course, is that it's ironic because crypto and blockchain, they're all about trustless systems, and here it's going to take a long time before that trust comes back. And again, I'm not a lawyer. I have no inside knowledge of the situation, but when you look at what happened, it looked like just good old-fashioned alleged fraud, essentially. So that's
what they said. Good old-fashioned embezzlement. Yeah.
You mentioned tech. Do you think that sort of with earnings power, that tech is sort of like an underrated sort of a sector right now? Given the fact that we could see sort of a re-rating of their profit power because of the fact that they're so kind of unfavored right now with rising rates.
Yeah, so I generally do agree with that. We like tech from a secular perspective. There are obviously lots of challenges happening in that sector, but from a long-term perspective, the power of tech, the information age, digitalization, all the new trends, those aren't going away. But when a lot of investors hear that, they think of timing, is now the time to get in. And that's where it becomes much more challenging. Obviously, layoffs are still playing out, specifically within tech. And so it'll take time for that to settle down. But this is also different from 2000 in that there's strong earnings within the tech sector, despite a lot of the challenges in how they're pivoting today.
I guess we'll see coming next year. So James Wu, thanks so much.
Thank you.
Congress wasn't able to interrogate SBF today, but U.S. Representative Brad Sherman still ripped into FTX and the entire crypto industry at today's hearing. He joins us to explain his stance next.
Sam Bankman-Fried is facing a multitude of charges today. The 30-year-old former head of crypto exchange FTX was supposed to testify in front of the House Financial Services Committee earlier today. Instead, he was arrested last night and indicted today on 8 criminal charges. The hearing went on without SBF, and California Congressman Brad Sherman had a big statement not only on FTX, but all of crypto.
For 5 years, I've been trying to ban American investments in crypto. I'm the only member of the House to get an F from the only crypto promoting organization that rates members of Congress. My fear is that we'll view Sam Bankman-Fried as just one big snake in a crypto Garden of Eden. The fact is, crypto is a garden of snakes.
Garden of snakes. Congressman Sherman joins us now. He serves as the chairman of the House Financial Services Subcommittee on Investor Protection and Capital Markets. Good to see you, sir. You wear that F as a badge of honor, but why do you believe this collapse of FTX is also an indictment on cryptocurrency as a whole?
Well, the whole purpose of cryptocurrency is to become a currency, and it isn't a currency yet, but it would like to be. The only reason it might have value is that it might become a currency. Otherwise, it's just the pet rock of the 21st century, an NFT without any artistic value. You got to ask, well, why do they want a different currency? Dollar's pretty good. And the answer is the dollar is really bad if you want to engage in tax evasion, sanctions evasion, evade bankruptcy court, which I know Sam Bankman-Fried is focused on now, drug dealing, et cetera. So the advantage of cryptocurrency over the US dollar, if it ever became a currency, is right there in its name. It intends to be a hidden currency, secret money. And so when you invest in something, the whole purpose of which is to evade the laws of the United States, or to create a tool that will help others evade the law of the United States, you shouldn't be surprised if you meet people who like to evade the laws of the United States. Cryptocurrency is a solution in search of a problem, but the problem that it is designed to be a solution for is that the laws of the United States are enforced.
So, Congressman, if all of crypto is junk, is the idea of decentralized finance then also junk? And then I guess, what is your message to those Americans who are big believers in this? Because if you take a look at the price of Bitcoin, it's actually come back quite a bit and just below 18,000 today. So there clearly are a lot of people who do believe in this.
Well, they believe that they can buy it at 16 and sell it at 17. And I would urge them to invest instead, take those animal spirits, take that willingness to invest and put it in companies that create jobs and plants and products here in the United States, instead of betting on something, which it might go up in value. It apparently did today. But its purpose is to undermine the US dollar and create a currency useful for tax evaders and sanctions evaders. I would say you can make money by investing in something that's going to help society rather than in something that aspires to displace partially the US dollar as a reserve currency, as they've announced is their objective, which would cost every family in the United States thousands of dollars in extra costs and bad economic results. So, you might be able to make money investing in a heroin processing operation. It might go from $16,000 a share to $17,000 a share. But if the ultimate purpose of the investment is to process heroin or to do something that is antisocial, that is designed to hurt the country, maybe you want to invest in something else.
Congressman, do you think that the SEC maybe dropped the ball here in trying to regulate FTX's U.S. operations, or is it something that they can't even look into because it's so opaque?
Well, in July, I urged the SEC to shut down every unregistered crypto exchange and every exchange here in the United States that was dealing in unregistered securities. And of course, all of the exchanges, crypto exchanges, do that. So I wish the SEC had done more. But the people who criticized the SEC at the hearing are the ones who have been hammering on them to do less, who have been attacking them every time they do something. And in fact, 19 Republican members sent a letter to the SEC just 5 months ago, berating them for being concerned at, as what the letter calls, the purported risks of cryptocurrency. Well, those risks are not purported. They're quite real.
I really want to ask you if you heard from snake lovers, but we don't have enough time. I share your dislike of snakes. Can't stand them. But I do want to ask you, you didn't get a chance to talk to Sam Bankman-Fried today. If you had that opportunity, what question would you like to ask him? And what was left unanswered today, although John J. Ray was very upfront?
The one question I had, one of the questions I had for him was whether he had consulted with experts or attorneys who could advise him on where he might flee and avoid U.S. extradition. I think we saw that answer this morning, and the answer was no. He had not consulted, or he had not taken their advice. So the other question I was going to ask him is that he, in an interview he did in November, said that he gave tens of millions of dollars to dark money Republican operations, and of course he's also gave openly to some Democratic operations, usually against friends of mine in primaries. And I would have asked him to identify which dark money Republican operations he gave to, because the Democratic operations that he gave to are all a matter of public record.
Does Congress have a lot of looking in the mirror to do, given that he appeared to buy an awful lot of influence there on Capitol Hill?
We've got a flawed system of government where members of Congress seek campaign contributions and deal with lobbyists. And there's no PAC here in Washington on the other side. There's not a PAC here that is dedicated to making sure that our tax laws can be enforced. There's not a lobbyist paid by any organization that's trying to make sure that the US dollar remains the preeminent world currency and reserve currency. So we do not have a perfect system of government. We have a system of government where people are raising money for political campaigns. And sometimes that's counterbalanced because you have people on both sides with lobbyists and PACs. But in this case, all the money, all the power, all the lobbyists are the crypto billionaire bros that literally make money by making money.
So, Congressman, you want regulation. You just don't. You want a specific type of regulation. I know you've been extremely critical of those on the other side of the aisle that have been critical of the SEC and the potential role in regulation. If you could design it, what do you want? And how confident are you that we are going to get regulation in a very timely manner?
We're not going to get what I want, which is a prohibition on Americans buying crypto.
Well, then what's more realistic? I guess what is something that you think both sides of the aisle could agree on?
The most realistic is that Congress not legislate at all, because as I said, all the money and power is on the side of dismantling a system in which we can collect taxes and enforce our sanctions laws. The SEC has most of the authority it needs under present statute, and were we to try to pass a statute, it's more likely that we would make it worse, that we would reduce regulation. Keep in mind, Sam Bankman-Fried was here often in his shorts, lobbying, passing out money for the purpose of getting the SEC completely out of crypto. And all of my colleagues have trashed Sam Bankman-Fried. We shouldn't trash Bankman-Fried and then pass his bill. So the most important thing is to let the SEC do their job and to encourage them to do their job. Now, if we could pass legislation that said all of crypto was a security, rather than most of crypto qualifying under a 1940s case that defines what a security is, that would be a step forward. But with no lobbyists, no money, no PACs, it is unlikely that we're going to be able to pass good legislation. Let's just hope we don't pass bad legislation.
All right, Congressman Brad Sherman, we really appreciate you taking the time to join us here at Yahoo Finance. We look forward to having you back. Thanks so much for taking the time this afternoon. We want to continue on this story of SBF, the fallout of the collapse of FTX. And for that, we want to bring in our next guest. We have the Wolf of All Streets podcast host, Scott Melker. Scott, let's just talk about what we just heard from the congressman there. I know you probably have a very strong opinion on his take of this when it comes to crypto. He called it a garden of snakes during the hearing today on Capitol Hill. Just reiterated that a minute ago, saying that this isn't just SBF and an FTX problem. Really, it's all of crypto. What do you think?
I hate to disparage a sitting congressman, but I don't think he said a single thing that was accurate. And talk about the pot calling the kettle black. To call any entity a garden of snakes when sitting in the House of Congress is irony of the highest order. He even went on, obviously, to describe the broken political process and somehow believes that more PACs and more money is the answer to fixing this. This is outright fraud. Sam Bankman-Fried is a criminal. This is not an indictment of the crypto industry. It has nothing to do with the actual assets or the asset class. It's simply fraud. It's disingenuous to pretend that this is because of crypto. We've seen fraud in other industries. Bernie Madoff was not an indictment on the entire financial system. So I think that he's just off base. These are his talking points. And they're doing their victory lap right now because of this collapse. But the time to dance on the grave of crypto is going to come to an end very soon.
If this has nothing to do with crypto, what in the world is the SEC and the CFTC involved for?
Well, the SEC and the CFTC obviously should be involved in giving us reasonable and rational regulation, but the SEC has given absolutely no clarity. They're completely complicit in everything that's happened here because they forced all of the innovation, all of the Americans who wanted to trade, all of the investment offshore to places where they couldn't regulate. If the SEC had simply given some clarity as to what is a security, what is not, how an exchange should be regulated, then we wouldn't have had this problem in the first place. And the SEC and CFTC are simply jockeying for position and for power right now, each trying to deem the assets securities or commodities so that they can oversee it. Right now, this is just an opportunity for them to come in with a heavy hand on the industry when they failed to do so when they had the chance before. This is as much their fault as it is anyone else's.
Hey, Scott Pross here. You know, as an outsider looking in the world of crypto, we kind of see one after another sort of dominoes falling, more kind of wrongdoing. And now after FTX, we see Binance possibly in the crosshairs for some wrongdoing they did a couple years ago. I guess from the outside looking in, it seems like this industry is sort of full with some sort of, I don't want to say fraud, but some kind of wrongdoing. Is there a way to actually kind of root that out or kind of improve the reputation of these companies so people can actually want to be involved with crypto that are sort of like not necessarily huge digital natives?
Well, first of all, once again, none of that has anything to do with buying Bitcoin, buying Ethereum, holding those assets and believing in their use case. This has to do with the industry that was built around it, right? Once again, you can go back to 2008 and talk about Lehman Brothers and the contagion that happened after that, but nobody ever said that Wall Street and banks shouldn't exist after those things happened. Speaking of Binance, I haven't seen anything substantiated as of yet. They did pause USDC withdrawals, but you could withdraw literally everything else. Everybody who's been watching knows that Binance automatically converts USDC to their own stablecoin, BUSD. So when people are coming to withdraw USDC, they have to go back to USDC and then offer that withdrawal. So I don't see that as a problem. I think this is a lot of fear, uncertainty, and doubt. People very reasonably are worried about leaving their assets on exchanges, but you can simply self-custody, take your assets, put them in a hardware wallet, and not worry about literally any of this. That is the original ethos. That is the original reason for Bitcoin, so that you could opt out of these legacy systems that exist and avoid the Brad Shermans of the world who are going to come in and the Gary Genslers who are going to try to regulate and legislate this away. There are absolutely reasons for crypto that have nothing to do with what Brad Sherman said. And for that reason, people should hold this asset, hold it themselves, self-custody it, and be their own bank. But I don't see any reason to believe that Binance is going under at the moment. And of course, we saw contagion because everybody was washed out. As Warren Buffett always says, you can see who's swimming naked when the tide washes out. Well, there was a lot of that in the crypto industry, but again, not an indictment on the assets.
Well, Scott, there clearly are still a lot of believers. We brought up the price of Bitcoin today, still very resilient, up, another 3.5%, just below 18,000. When you talk about getting investors back on board or maybe convincing those that have been a bit skeptical because of everything that's played out in the industry over the last several months, what's it going to take in order to see a significant move to the upside for Bitcoin?
It's hard to know. I mean, we can go back to March of 2020, of course, when we saw Bitcoin bottom under 4,000, March 12th. Everyone will remember Black Thursday for crypto. The stock market bottomed 12 days later. Everybody thought it was over. Stocks doubled. Bitcoin went up 17 times to $69,000. Right? So when the Fed eventually pivots, when we have money printing, if that ever happens again, when we have quantitative easing, or at least a slow in the hawkish cycle, I believe that we will once again see Bitcoin rise and it'll be a high beta asset like it was before. If you believe that the bottom is in or close, this is the asset class that you want to be in on the way up. It doesn't need a narrative. It doesn't need a story. That is how it will behave. People should absolutely be rushing to buy Bitcoin right now. If they liked it at 69,000, 50, 40, 30, 20, you should absolutely love it at 17,000. This is simply another bear market, another bearish cycle. We've seen it over and over and over again in every single market. And the more people scream that it's dead, that it's going to zero, that it has no use case, that it's for criminals and it's only for evading sanctions, the more you should be interested in buying it.
Quickly, listen, 8% of the American public has a favorable view of crypto. 8. That is half of Congress to come full circle. And if Sequoia Capital was fooled, who manages $85 billion, how do you expect the industry to regain the public's trust?
I don't think the industry needs to regain the public's trust. I think that the asset classes need to regain the public's trust, and this has nothing to do with it. Bitcoin itself has nothing to do with what happened with FTX. I don't know how to state that more plainly, but this was outright fraud. It has nothing to do with Bitcoin. It doesn't matter if 8% of the population has a favorable view of it. The asset will rise again, and it will remain important. It will become a hedge against inflation and all of the reasons that people buy it in the first place.
Scott Melker, always great to have you on. Great to get the other perspective in there today. Thanks so much for joining the show this afternoon. We'll see where the price of Bitcoin is a couple of months from now. We'll have you back on to discuss. All right, well, coming up next here on the show, how Amazon is looking to cash in on its brand new e-commerce shopping feed. We'll tell you about it next.
Social media is all about the concept of follow the leader, and that leader in recent years is clearly TikTok. Now the world's largest retailer appears to be emulating the China-owned social media platform. Amazon rolling out the short-form video and photo shopping feed called Inspire just in time for the holidays. Here to tell us all about it, Amazon Shopping Director Oliver Messenger. Also with us, Ali Garfinkel today. Oliver, good to see you, sir. Was Inspire inspired by TikTok?
No, we have a saying at Amazon that it's a mantra that we do honestly live by, which is that we're customer obsessed and not competitor obsessed. And that's true in this case as well. We spend a lot of our time talking to customers and understanding what it is they like about Amazon, where we're meeting their needs, and where perhaps there's an opportunity to develop something new. And what we heard from them was that they love coming to Amazon with something roughly in mind to buy. They'll search for that product, they'll browse a category and get to that. But what folks wanted in addition was something a little bit more open-ended, a way for them to sort of more serendipitously discover something, and in a way that hopefully was entertaining, content forward, but which also maintained the thing that they've come to love and appreciate about Amazon, which is that massive selection of products and that super seamless shoppability as well.
Oliver, Ali here. Talk to me a little bit about kind of the genesis of Inspire, because it's something that you've talked about as being led by the consumer feedback.
Yeah, it is. We like I said, we spend a lot of time listening to customers. We have survey sessions, we have usability labs, and there's also ways within the app and the website itself to actually submit feedback directly. And this was something that we noticed people were asking for repeatedly. The other thing that was sort of interesting is we've had a large corpus of content inside Amazon for a while now, whether that be reviews and videos created by other customers, influencer and creator content as well. We have our own influencer program, and brands themselves can come in to the platform and present sort of shoppable media, whether that be photos or videos. And so customers on one hand were asking for this serendipitous, more open-ended way to shop. We have this awesome selection of content that we're continuing to get in as well. We sort of melded the two and made it personalized and tailored, and that's what you have today in market with Inspire.
So do you imagine this then sort of streamlining the consumer experience on Amazon? Because I know when I go on Amazon, I usually know what I want already. It sounds like you're trying to introduce kind of a streamlined discovery process almost.
Yeah, it's streamlined in the sense that it is tailored to you and your interests. When you start up Inspire, we ask you, what are you interested in? What do you want to see? And you can create, select your hobbies or types of things that you're into, and then your feed will learn from that, and then you can give us explicit signals as well. So it's streamlined in that sense. But it's also deliberately not streamlined in the sense that we'll show you content that maybe you didn't expect, right? From a range of sources, brands, creators, and customers in line with those interests. So it's always relevant to you. But it's content and potentially products as well that you may not have found had you yourself been browsing manually or searching.
Oliver, a bipartisan group of lawmakers unveiled legislation today to ban TikTok, which again, most feel this is emulated. You know how much data Amazon is able to collect on U.S. consumers. Should U.S. consumers be concerned about that type of data collection by the Chinese government?
I'm here to talk about the Inspire product, right? And we're, like I say, customer focused versus competitor focused.
Understood. The Amazon influencer has really come about in the past year or so. How did the Amazon influencer, can you tell us about the growth of it and how it may have led to Inspire?
Yeah, it's a program that's been around for several years now. And you've been previously able to come and browse detail pages, search explicitly, see influencer content on detail pages. And there's also some hubs as well, where you can go and browse and follow creators and have that sort of show up on the site too. But what we're really doing now is we're giving much more of a, I think, well-deserved spotlight to that content, right? Where right now, super seamlessly there, right on the front of the app, you can tap and you can see that influencer's content. And as long as we continue to do our job well, that content, that influencer, those creators, they're going to be relevant to you and your interests as well, which I think is incredibly powerful, because now folks can go out there, they can create that content, and we will help get that content to the right people at the right time. So it's essentially sort of an elevated springboard in a way that they can be more creative while earning a living. And it's been really fun talking to the influencers. We had a summit actually a month or so ago. We sort of gave them a sneak peek of this. That's actually driven a lot of really high quality content that's now showing up in the feed as well, and that customers are getting to enjoy.
Oliver, we're headed into 2023, and I'd love to hear about how you're kind of thinking about scaling this moving forward, and if there are any other themes for Amazon shopping that you're excited about for next year.
Well, I won't leak my roadmap. That'd be a bit of a faux pas. We have a lot planned. We recognize that this is step one, where the team is super proud and happy with what we've got out there in market. Customers are enjoying it, but we also know that we have a lot to learn and a lot to sort of go and build out. We have a lot of good ideas that we're going to go off and we're going to validate and make sure they are smart ideas, and then we'll go off and build them. But there's also time in our schedule, to be honest with you, that we're dedicated to unknowns. Like, we expect to learn and to be surprised and to come up with new feature ideas from talking to customers and from watching people use it. I want to sort of double down on that and continue to help customers. At a high level, we're going to continue getting this thing to more customers, right? That's part of our big plan, is to get this to all Amazon customers and have it be this super delightful, super relevant, super tailored experience. We also want to unlock regular customers as well to create more content for this as well, to sort of get their voice, their opinions out there in a range of different media formats as well. And per the prior sort of question and point, we want to continue to empower our influencers with the right sets of tools to get their content to the right people at the right time.
And we're out of time, but Oliver, when can all of us see Inspire?
Stay tuned. I think our official message on this is we're targeting Q1 early next year.
Looking forward to checking it out. Oliver Messenger, Ali Garfinkel, thank you both for being here. Coming up, the future of healthcare. We'll tell you what one of the early investors in Moderna are looking to invest in next. Stay with us.
We're going to go very quickly into a phase 3 to get this drug in melanoma to patients as fast as we can. But what's even more exciting to me is we've proven the mechanism that Moderna's mRNA technology can teach cancer patients T-cell how to recognize cancer. So what does that mean? That I believe this should be used in many more cancers.
That was Moderna CEO Stéphane Bancel. You can see shares of Moderna surged today, closing up nearly 20% on the news that the company met positive results from its cancer vaccine clinical trial. Now, meanwhile, the VC firm that helped launch Moderna, Flagship Pioneering, announced a new healthcare platform to help create medicines that treat and preempt a broad range of chronic diseases. Anjali Kimlani joining us now with the founding CEO of that company. Hey, Anj.
Hey, Shauna, that's right. Joining us now, Margot Georgiadis, and I'm so sorry, Margot, if I mispronounced that, founding CEO of Flagship and Pioneering and the CEO of Montai Health. Really interesting news today, both for, the old company helped launch and the new one too. Chronic disease, really a major part of spend in the country going for years, and it continues to be a concern in the future. So this is a really interesting sort of new platform you're launching. Tell us a little bit about it.
Well, thank you for having me today. And it is an exciting day for Moderna and Montai. Montai is a new company that's unlocking the power of nature with digital technologies, as you said, to solve today's biggest healthcare challenge, the immense and growing burden of chronic disease, which, is afflicting over 2 billion people around the globe and includes diseases like inflammatory and autoimmune diseases, heart, lung, and kidney disease. And I'm sure that everyone listening today knows someone who's impacted by one of these diseases.
So talk to me about what Montai is specifically doing, because I tend to think about, looking at molecules in a collection of molecules, kind of like, a digital version of the pill book, which is the analog version. So walk me through what's going on here.
Yeah, so if we look at how we approach treatments today, we typically intervene more at the later stages of disease. Therapies are not safe for long-term use, and we're not addressing the underlying drivers of disease. We typically go after a lot of the symptoms, and we need to completely reimagine our approach to treating these diseases if we're going to make a dent in the enormous human and societal costs of these diseases, and technology is now enabling us to do that for the first time. So at Montai, our approach, it's uniquely human-centered. Our medicines are based on what we call anthromolecules, which is a privileged class of molecules that have a long history of safe, chronic human consumption. So think about it like this. We've always talked about the fact that food is medicine, but we actually haven't known exactly how it impacts our biology at a molecular level. And that's what we're doing at Montai. We're systematically understanding that so that we can create a next generation of medicines. And what's exciting is that all of our 40 medicines, actually well-known FDA-approved medications with a history for safe long-term use for diseases like Parkinson's, asthma, and heart disease, are already here. We just have not mined this unbelievably exciting chemical space systematically to create a next generation of therapeutics.
I know that in a statement today, we got a comment from your counterpart noting that you're asking the question, what is the key to preempting or treating chronic diseases with molecules we already consume? And I know that also includes, what we know about, to your point, food, but also herbal medicine and the like. So it seems like it's a very broad range and kind of veers outside what we think about when it comes to the drug industry today. I'm curious about how this fits into the whole conversation about cloud computing and their whole hold on the industry right now. Moderna, for example, really able to capitalize on that in discovering the COVID vaccine formula. So is that sort of where this is headed?
So absolutely, it's a cousin. We see this beautiful pile of keys sitting in nature, just waiting to be unearthed. And we're using advances in technology, the digitization of chemistry, plus the digitization of biology, the much deeper understanding of our biological pathways, all the omics data, so that we can find as many lock and pathway key combinations as possible. We may have to polish a few of these a bit so that they work even better, but AI and machine learning and the digitization of this space is what's enabling us to do this like never before. There were initiatives, say, back in the 30s and 40s, that's where antibiotics or antifungals came from, but typically it's been a little bit more serendipitous discovery. But now with AI machine learning, we can do this systemically at scale for as many pathways and diseases as possible. And we believe we can usher in a completely new way of thinking about safe therapeutics that can be pathway modulating, which gives us that chance to intervene earlier and potentially slow or even stop the progression of some of these really challenging chronic diseases.
What's the low-hanging fruit there? What do you think is the easiest target to go after first in the chronic disease space?
We are starting in the autoimmune and inflammatory space because we see such enormous unmet needs for those patients. And we're very excited to begin advancing a pipeline of therapeutics over the next couple of years.
Sounds good. Well, we'll have to keep an eye on that. Margot Georgiadis, thank you so much for joining us today.
Thank you for having me.
Well, my stock to watch for tomorrow is Lennar. Lennar, one of the nation's largest home builders, will be reporting fourth quarter earnings after the close on Wednesday. Wall Street expects the company to report quarterly revenue of $10.14 billion and an adjusted earnings per share of $4.89. The stock has lagged the broader market this year, with shares down 22% year to date, but have rallied 5% over the last week heading into earnings. Coming up, the Ford F-150 Lightning EV not only won Motor Trend Truck of the Year, it made history doing so. Find out how next. Welcome back to Yahoo Finance Live. This is another big step in the mainstreaming of EVs. Motor Trend just named the Ford F-150 Lightning its 2023 Truck of the Year, a unanimous choice by judges citing its feature set and real-world applications at the home and the job site that only an EV pickup could do. Though the truck debuted with a surprising sub-$40K sticker price at launch, supply chain issues across the auto world had Ford hiking prices for the base model twice. I asked Ford's head of global EV programs, Darren Palmer, about these price hikes and whether rising costs were still an issue. Here's what he had to say.
The whole purpose of the F-150 was to make it accessible to as many people as possible. So when we launched the vehicle, we did that even with the basic Pro model, and we sold all of the different series all the way up to the top. And we want to hold it that way. So we're keeping the price as low as we can. We did, however, have to raise it because commodity prices, especially battery prices, they did go higher at the moment. And so we had to react to that. But our goal is to keep the vehicle as affordable as possible through its whole lifetime.
Despite inflationary pressures, Ford is charging forward with its EV game plan with an audacious production goal to meet next year, as well as by mid-decade. Here's Palmer again on Ford's EV ramp-up and how they'll get there.
So we've set some very ambitious goals for our volume. And the F-150 Lightning, the building is being expanded now to take it up to over 150,000 units a year run rate by next year. We're also doing that on our other vehicles, the Mustang Mach-E and the E-Transit. All of them need a huge upgrade to meet customer demand. So we're expecting to see over 600,000 units by the end of next year. And we're on our way to 2 million units by the end of 26. And we've sourced the materials we need for that 600,000 units already. for the end of next year. And we're already 70% sourced for the materials we need for the end of 26 as well.
So those are some big production numbers. We'll have to see if they can meet those goals, with Ford's competitors kind of doing the same thing here, you know. So not only is Ford doing it, but GM, they're a huge crosstown rival. They are actually sourcing a number of materials, spending a lot of money in building up their capacity to meet those millions of EVs they got to make in the next couple of years.
Yeah, it's been amazing just to watch the demand for the F-150 Lightning, this truck, because I think when it was initially announced, a lot of our skepticism was whether or not the traditional pickup truck driver was going to go for an EV-made truck. And when you simply look at the demand, the fact that Ford hasn't been able to keep up with the demand, the reservation list, they've had to stop it multiple times since they did announce this truck. It's just been amazing. And Press, I know you've driven it, but Dave, you love the F-150. Isn't that your dream car?
Listen, I have been talking up the Ford F-150 Lightning until the first second I heard about its development. Praz can attest to that. I do believe this car will, like its predecessor, like its traditional model, become the best-selling truck in America for 40 years. And now they're on 3 rotating crews of 10-hour shifts, 7 days a week, just to keep up with demand. And listen to this from Motor Trend, because it just was an absolute gem when describing the award. While some vehicles change the world by being radically different, Tesla, maybe, I think was alluding to them, like the Ford F-150 Lightning, change it by being different where it counts and familiar where it helps. So it's almost as if they're taking a shot at some of those that want to come out of the box and do something drastically different, i.e. the Tesla Cybertruck, which I am not a big fan of, and really touting what speaks to the average, everyday American, average Joe that loves the Ford F-150. Very bullish on this vehicle, obviously.
You know, they really hit that sweet spot, right? They kept it looking like a traditional truck, but also added all these features like the ability to power your home or job site, over 300 miles of range, immense power. And in the base model still costs $52,000 before any tax credits.
Yeah, so certainly very, very expensive. But Praz, you've driven this, and you've driven a number of pickup trucks, a number of EVs. How does this stack up to others within the category, and then just more broadly, the EV landscape overall?
So we've tested both the Rivian and the F-150 Lightning, and they
Which was last year's award winner, right?
Yes,
the Rivian?
correct.
Okay.
Last year's Motor Trend Truck of the Year was the Rivian. Look, both are very different. The Rivian is an adventure truck. It's got a lot of power, 4 motors. It's meant to sort of like take out upstate, go hiking, go camping, that sort of thing. The Ford is more of a work truck, and it's got more utilitarian sort of presence and features. And I think it's kind of going after 2 sort of different buyers. And which I prefer, maybe the Rivian, but the Ford is just so rock solid, and you have that nameplate there. And I just don't see how you can go wrong with either of these.
Far different price points, though, right? Rivian is still, we're talking $100,000 ballpark, right?
So we heard Rivian CFO said the average price last quarter of Rivian trucks was $93,000.
Right.
Average selling price.
Yeah, so far different customer bases. Still a lot of questions if the Ford F-150 Lightning can continue selling at this pace, if the power grid can come anywhere close to supporting it. That thing is a monster. And it's not entirely clear if we have anywhere near the power grid to support something like that, mass produced.
I think the hope is that the grid will just slowly sort of improve as more EVs come online. And right now we're only 5% EVs on the road right now. It's okay, but go to 20? That's a lot.
Yeah, but I also think it's holding a lot of people back from maybe purchasing EVs, knowing that the infrastructure simply is nowhere near where it should be or where it needs to be in order for that mainstream adoption.
You need a house like Dave with a nice big EV charger there, right?
Exactly. You can build your own. Stop waiting for everyone else to do it. There you go. Business idea.
There we go. Thank you, Praz.
Coming up another day, another piece of news from one of Elon Musk's companies. Stay tuned to hear what it is.
is now the world's second richest man, Elon Musk, behind on rent. The New York Times reporting Twitter has stopped paying rent on its offices and is considering not paying severance packages to former employees. Now, that follows news that Elon Musk dissolved its Trust and Safety Council, the advisory group of around 100 independent civil, human rights, and other organizations that the company formed in 2016 to address hate speech, child exploitation, suicide, self-harm, and other problems on the platform. Again, this is New York Times reporting as per the rent and severance, but follows just a string of erratic news from Twitter. It is not entirely clear where this platform is headed from here, Shauna.
It certainly is not clear, and we also know that that ideas that Elon Musk puts forward initially aren't always implemented and go through a couple of iterations until actual change is made. But this is pretty astonishing, I think, to once you take a step back and realize that they haven't been paying, if this is in fact true, haven't been paying rent on their San Francisco office. Also, $197,000 bill from private flights that were used during the first week of Elon Musk's takeover. That has not been paid. Apparently, this is according to a court filing in New Hampshire. And then also just talking about if they don't pay the severance payments for these employees that have been laid off, the consequences of that, whether or not that's illegal. And he's also apparently threatened to sue employees if they talk to the media today.
I mean, it's very a Trumpian playbook, right? Sue me, and I'll sue you, right? It's go to the courts, fight it out. I'm going to pay rent right now. I'm not going to pay your severance. But, you know, it's a very kind of costly gamut to do, especially when you're trying to reform a company that's Twitter right now in the crosshairs.
Yeah, and look, it is Trumpian and how he dominates the news cycle. It was just a few days ago we learned we have to pay $11 a month for Twitter Blue, and that legacy check members are going to lose their blue check. It's hard to keep up, sipping from a fire hose like we did with Trump.
Multiple headlines every single day, and it feels like we've been talking about them every single day. All right, well, that does it for us today on Yahoo Finance Live. Be sure to come back tomorrow afternoon, 3 p.m. Eastern Time for all your coverage leading up to and after the closing bell. Have a great night.